Alright, so we're on the charts, live trading session. I've already taken a trade today, and let's just go over what the trade taken was. It was one position. We've come out 101 pips using dynamic closures on a trailing stop loss. The original intention was to take the rebreak of the 15 highs, which we did get. We got a rebreak of the 15 highs on the open, so we had a small bit of drawdown after a wick break at the highs. Price action came back down. You had the hour candle open, tiny bottom wick, and then as price action came up, your initial advantage area was the current rebreak of the 30 highs, which you didn't quite get, but we needed to fill off that wick anyway on the next open, and that's what gave us the conviction to enter the trade quite aggressive just before the hour candle gave us the candle closure. So we've trailed our stops as price action begun its drive up, closure above the risk off area. We went break even, price action started coming down. At this point where we saw that price action has some form of resistance and area as a level, we decided to trail because a rebreak of these lows is likely to push you further down, which eventually it did after peaking you back up into the trade. Now, before we trailed, we had a peak of around 224 pips. Our closure was around about the 101 pip mark. And on the live terminal, you can see here our daily P&L is up $500. That's 100 pips, and we've logged this in our trade journal. So I am starting to get used to position sizing. We went in with a 5 contract, which is $5 per tick. So 100 pips times by 5 gives you the $500 outcome of the day. So, and you can see the trade here in the journal. We bought 5. Total 500 for the day P&L. We entered the trade at 12:55, exited at 1:13 p.m., which is British time, UTC 0. And then now you've got the hour candle opening up. Price action still respecting this area. If you're looking to get some form of bottom wick, retest of the lows, rebreak of the highs, you can still re-enter a trade like this. The trade bias for the entire day is to retest its daily high. You've identified the current range. 4-hour time frame just opened up as well, so we're expecting price to just shoot all the way up. So any buy on this current 4-hour candle looks to be validated, and that's exactly what I'm going to be looking for now. So we're going to wait for some confirmation, but all in all, it does look like when liquidity gets re-grabbed and retested at this area, rebreaks of the highs actually make a very solid move to the upside. We just need to look at managing risk. So we're going to clean the charts from our previous trade, and we're going to reanalyze and re-break down price for the new setup. So you're clearing all the lows now. Rebreak of the highs looks valid, but we need a mirror on price action. Mirror on price action is most likely going to be this area right here on price to push you up and re-challenge these highs. So your target area is most likely going to be this area here. Set from the highs is around about 92 pips. Rebreak of the highs gives you 355. Aspirational targets is almost 500. That's 476. And you're looking at around about a 200 and something plus pips stop. So if we're just gonna go based off of previous price action, it's a 1.67 risk to reward now because we're in the funding, we're in the challenge phase of my funded challenge for the 100k account. I don't want to take a trade opportunity that is less than a 1 to 2 risk to reward. Why? Because I want a 1% minimum risk, and obviously I want to get into a position that gives me no greater than 1% return. I only managed 0.5% on that first position, by the way, but we will risk off that trade position. And that was a good idea that I closed out that position with a trail. Otherwise, we would have just been out at a break even. Yeah, rebreaks of the highs look very, very attractive here. That is a fake out on the 1 minute time frame. Rebreaks of the highs actually look very, very neat for price action to continue pushing up. That looks very neat indeed. Rebreak of those highs, price action should pop up. Yeah, we should see this start to move, and then potential to put your stops below the lows. You've cleared the previous low of the previous candle, and your advantage point is around about almost 200 pips up. Yeah, that is a very neat trade opportunity that I did not get into. We'll wait and see what happens on price. Right, price action has given you a very neat 5. The question now is, are we ready to drive? Because the 1 minute time frame gave you some form of fake out. I'm acknowledging the fact that you're within a range. A rebreak of those highs is still the rebreak of the 5 highs. You still got a minute 30 left. Rebreak of these highs is the 15 to 30 to 1 breaking those highs, price action should be able to pop up all the way. You've got a 153 point advantage point here, and I'm looking to execute this trade position. I just feel like if price action on the 5 is starting to show signs of struggle, there is a very strong chance price needs to retest this entire liquidity zone, which if I was in this rebreak of the highs, most likely we'll see your stop loss first. It's very interesting. The 1 is showing me signs that price action is still trying to respect. I feel like it needs a little bit more in terms of requirements. The 30 already has the bottom wick. The 1 hour already has the bottom wick. 4 hour already has a bottom wick. There we go. We're getting rebreak at the highs. Well, not yet. We're still respecting the area. Rebreak at the highs is at 45.48. Let's see. I think we're going to get it. 24 seconds left on the 5. Yeah, we're going to get the push on a rebreak at the highs right now. At 50. There we go. So price action has rebroken those previous candle highs. It's a very strong drive up for this candle. Yeah, I'm considering if I should get into a trade position. Risk at 45.37. That's 200 pips if we're using the break of those lows. Oh, technically that works. Rebreak those highs. Price action. Yeah, you can. Still 155 pip risk average. Yeah, it does make sense, that rebreak of the highs there. The reason why I'm being very skeptical is because I've already taken a win for the day. Do I want to get greedy? We've put 100 pips up. My stops are still 200 pips. I don't want to get more than a break even for the day. That 5-minute candle closure could have been a little bit better. Wait and see. 5 minutes left until the 15. This thing should drive up. We should see risk off by the end of this candle closure at the 15. Because the 1 minute is very, very nice. It's continuing to push up. You should start to see momentum drive. But I think, for the most part, if I don't see another A++ setup, I'm probably going to call it off the charts. Even if I see another A++ setup, I think I'll leave it off of the charts because I'm still looking at implementing rules where, in order to avoid greed, you can only have a 1 trade a day. Seems a bit silly to me, honestly. I feel like if I have an A+ setup, I should take the A+ setup. It's still a range. Price could pop. Rebreak those highs. Price could pop. For sure. For sure. Let's wait and see. I feel like liquidity could come down a little bit more. If this low has only given you 45.70 minimum, you're going to challenge the same thing. And I'm not looking to execute an exit here at the trade at 45.66. I'm looking for a risk off. So the likely chance of a break even is higher. I might be talking absolute garbage, but for me, I think I would have wanted to see more of a liquidity grab towards 45.19. There's only one thing to do, which is wait and see. That's really nice to come challenge 45.74 minimum. Section checking in here. It's currently 3:44 p.m. Last time I checked in was around 2:12. So it's been about an hour and a half, and price action would have just stopped you out. It made sense as to why. Previous sequence, I was talking about how we didn't grab enough liquidity at this area, and there we go. Price action did fill what we expected to in the previous hour, so you got that previous candle wick fill, but it wasn't enough for price action to shoot up and retest the daily highs, which is originally what my daily bias is. My daily goal is for price action to come back up, retest and fill the range here at 45.91, which unfortunately you don't yet quite have on price. The 4-hour time frame is still very much ready to push. I feel like once price action rebreaks the highs, you'll have no problem. That might come late in NY session, but I will be calling it a session here. I'm not going to be looking for any other particular trades at this time. Unless price action comes all the way back down to retest this area, revalidate, break the lows, but that is probably not going to happen this late into the session. What you might see is price at this point will just start trickling up ever so slowly, and that's not really what we want to see when we're looking at taking a position. We want to kind of be in a very optimal entry area where price action has momentum to drive up, and currently we don't have anywhere that we can take advantage of that unless you take the rebreak of the hour highs, which is quite risky. 13 minutes left. The 4-hour time frame, 2 hours left of the candle, rebreak of the highs on the 30, which again you've got less than halfway through the candle and you've got a massive wick to fill. So not very clear in terms of the direction on price action anymore. But all in all, today's been very, very good. We had a clear read of roughly where price action wanted to go from this morning's price action, and we capitalized on that, right? We took the entry at these areas here. Price action came up, we used trailing stops to manage our risk, and we came out on top today as a winner, and that is the priority. It's not quite what I wanted with the 0.5%. I'm aiming for a minimum 2% day. However, it is what it is. We come out as a winner, and we're just going to have to go again tomorrow. As long as we stick to a specific outcome and a specific plan, then things should go our way. We should be looking for a 6% return somewhere. I'm not putting a specific time cap on it. We're getting used to futures, like I keep reiterating in all of these videos. But that concludes day 3. We're up 101 pips using 5 contracts today because our risk was fairly short. I think our risk was 100 and something pips. So a contract size of 5 made sense, just below the 1% risk limit. And that's that. So that's a wrap for the day. We'll come back tomorrow and see how we get on.